Will the Fed pivot? How long is this going to take? We're going to dive into some really juicy stuff today that really talks about the potential of how the SEC maybe, or should say, the Fed may be taking a new look at where the market may be sitting today and how this plays out, especially in the crypto markets, obviously in the securities markets as well. My name is Paul Barron. Welcome back into TechPath. Thanks again for joining us on the live stream here. One of the things you guys can do before we get started is make sure and hit the like button. If you're not already subscribed, hopefully you've done your homework, you've viewed a little bit of our channel, seen some of the things that we talk about here, which really gets into the dynamics of macro influence on where the market is going around crypto primarily, but also Web3 and new technologies as it relates to cryptocurrency. So hit that like button, smash it in. I've got a special guest with me today, and that is Mr. Mark Yusko, who comes over to me from Morgan Creek Capital. Great to have you back.
Hey, Paul, great to be with you as always, and happy fall.
Yeah, it's we're getting into the dire time of the year where all the earnings comes in, and we just see how bad it really was this year.
Yeah.
before the onslaught of
the miraculous recovery that's coming in Q4 that everybody keeps talking about.
Yeah,
well, I'll take the under.
Speaking of that, I want to flip to a clip because I think this is the perfect opening for today's show. And this, of course, is you over on the channel called Thinking Crypto. We've had those guys on before, but I want to play a clip for you, Mark. And you saying right. This, it just kind of sets the tone. Maybe we'll play a clip. It was so good that the clip itself was not playing. So the basics of it, maybe the guys will let me know if we have audio back on that. We'll fix it for sure. But basically what you said there on that was that we were in a recession and that we were going to see a absolute face melter coming across in terms of a potential new market out there. Now, when you reference that and you look at where the Fed is today, is this something you see coming sooner than later, or do you feel like this is really more of a long-term play?
Yeah. Well, look, we got a taste of it on Monday and Tuesday. So,
yep.
You know, what I said in the clip was that at some point, right, the Fed is going to realize they've made a terrible policy error. I mean, this will go down, when we look back in history, this will go down as probably one of the three great policy errors in the last 200 years. I know, big statement, right. But you know, we didn't have a central bank in the 1840s, but the national banks, actually we didn't have a national bank either. We had state banks back then. We were in the free banking era, but the state banks kind of collectively made probably the biggest policy error and plunged the country into a pretty significant depression that no one ever talks about because it was back in the 1800s.
Right.
Then we had the second worst set of policy decisions, which would have been in 1930. And that was a combination of Congress, Smoot and Hawley, dumb guys that passed tariffs. Tariffs, never a good idea. Never have been, never will be. You know, Adam Smith was right. Comparative advantage and free trade and globalization are all good things, not bad things. And then on top of that, the Fed, which had just been established probably 17 years earlier, decided to tighten into a recession and turn a garden variety recession into the Great Depression. 1931 was the worst year in equity markets, not 1929 or 30, 1931. And so here we are again, 90 years later, and it's always 90 years. There's this 90-year cycle. It takes a full generation for people to forget. And so here we are again on the verge, and not even on the verge, we're in a recession. Yeah. It's like a modest recession, like a 2001 recession. It's not the end of the world recession. But the Fed, I believe, has made an epic policy error by over-tightening and exacerbating the problem. And it's not just in the US. I mean, it's everywhere. Every central bank in the world has decided to try to defend their currencies, except the Japanese and the Europeans. But that's another story for another day. But look, what I was saying was when the Fed realizes the error of their ways and they hint They don't have to do it. All they have to do is hint that they're either not going to raise rates or they're going to get back on the QE train, which they will, right?
Mm-hmm.
Japan said they would stop QE in 2008. They're still doing it today.
Yep. Yep.
Once you start, you can't stop. It is impossible until you do a debt jubilee. So once that pivot happens, the Powell pivot, as I refer to it, there will be a face melter of a rally. And I said, we saw a hint on Monday and Tuesday. We saw back-to-back 3% up days.
Yeah.
And it's just short covering. All it is short covering. We have companies that are down 90, 95, 98%, mm-hmm. and everybody's short. And if those things have to get covered, you go from 2.5 cents on the dollar to 5 cents on the dollar in a hurry. Now you're still down 95% from a year ago, but you could have a really material rally. The problem is those are bear market rallies, right? There's never been a 4% up day in a bull market.
Yeah.
And it makes sense, right? A bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. Okay. A bull market is a market that goes up most days and goes down sharply on bad news or perceived bad news. So what we had is a market that goes down most days since last November. And we had this good news or perception of good news. We didn't even actually have any good news. There was an emergency Fed meeting on Monday.
Right.
We didn't hear anything about it. They didn't make any declarations. They didn't say they're going to stop raising rates. All people did is say, well, Credit Suisse was on the verge of bankruptcy. Deutsche Bank on the verge of bankruptcy.
Right.
So clearly the Fed must have decided that they're going to ease.
Something's up. Yeah, something's up.
They didn't say that. But the market didn't care. They didn't wait around to hear. They just started buying.
Yeah, and we see, these kind of knee-jerk reactions from the market often on just small little nuances coming typically out of Powell's speeches in the past. Again, I think the markets have been burned a little bit because of the downside that we have seen over the past 6 months. And obviously now many people still speculating as to whether or not this goes into Q4, Q1 for next year. And I think the scenario that plays into it, and back to your point, yes, I would agree. Nice little pivot. Obviously, if you look at the chart here, just on Bitcoin up from, right there on Monday, nice little move up here from what was a low at 19,000. So I think many are looking at this, but again, our sentiment data that we've continued to look and monitor closely on Bitcoin, along with other crypto assets, we still see these kind of ebb and flows of sentiment data, mostly through investor sentiment, that still hasn't at least proven to me yet that we've unlocked, and we're in a position where we could see a little bit of a scoop off the bottom. The question I have,
well, Paul, it's a really important point, and let me just say that when I'm talking about the face melter, I'm really talking about equities, right?
About what?
I think
Repeat.
Equities, the equity markets.
Okay. All right.
In crypto, I think we're spring, right? I think crypto winter ended on June 13th. I think we're in crypto spring, which will last through first quarter next year.
Okay.
And what does that mean, right? Well, crypto winter is where you go down a lot, right? And we went down, 70-something% peak to trough.
Oh, yeah.
And we bottomed on June 13th. And now we've kind of bounced around the bottom here. And that's spring. Spring is, think about spring, right? It's cold, it's warm, it's windy, it's muddy. It's kind of, And so everyone's saying, oh, we're going to have this bull market. No. The thing about crypto, the reason sentiment's so washed out is Bitcoin is the cheapest it's been other than 3% of the time, right? In only 3% of 14 years has Bitcoin been cheaper relative to its history. So that's why people are so unhappy. Now, the markets, on the other hand, the equity markets are still, despite being down 21% year to date, they're still in the 93rd percentile expensive. Stocks could fall 50+% just to get back to fair value.
So your
And
theory is
usually
that
they go
possibly the
below
stocks
fair
go
value.
down, Bitcoin holds? Is that what you're thinking?
I absolutely think that could happen. And
Okay.
why? The reason, if you look at a history, 14 years of history, Bitcoin is zero point 0.0 correlated to bonds and 0.15 correlated to stocks, meaning the directionality of one has nothing to do with the other. 0.15 is a really, really low correlation. But everybody says, but Mark, November to June, it was 70% correlated. Yes, it was. Because what was November to June? November to June was one of the great liquidations of leverage that markets have ever seen. We had the most leverage in equities in history. Margin debt was the highest it had ever been. And we had the
Right.
most leverage in crypto. Michael Burry pointed this out actually a year ago, February.
Mhm.
So he was way early to say, look, there's just too much leverage. In a liquidation, right? When Peloton goes down 95%
Right.
and you get a margin call because you bought Peloton on margin, you don't get to sell Peloton to pay back the margin because it's not worth anything. You have to
Yep.
sell bonds, cash, gold, Bitcoin. So what happens in liquidations? Go back to March 2020, everything fell. But then Bitcoin rallied really hard off the bottom, up
Mhm.
much more than stocks. Why? Because it's uncorrelated over the long term. But in those short windows of liquidation, where the leverage was coming out of the system, people have to sell what they can sell, not what they want to sell. And that's
Sure.
why
Sure.
bonds did so poorly. I mean, that and rising interest rates. It's why gold has done so poorly. Everybody says gold's supposed to do well in a recession. Well, it normally does, unless you have to sell it to pay back your margin debt,
Right.
which is
Yeah.
exactly what's happening.
Yeah, in looking at, CoinDesk kind of ran on a story here of Bitcoin. I don't know if I would call it busting past 20K, but we did get that kind of move, obviously on hopes of a pivot. A little bit of a light move in general. So when you look at the chart in the sense of where Bitcoin is going, and back to your point, I think I pulled up the year to date to kind of just, kind of go along with what you're saying is it has kind of skirted along a sideways action here for quite some time since its bottom at around 17.8 or so. So I would agree with you is that there's a lot of resiliency here within Bitcoin. We've seen some little runs to 23, and so on. But the real opportunity could be right in front of us right now, in the sense
Yeah.
that there's so many macro pressures pushing on the Fed. Obviously, from whether you look at Europe's situation, you look at what's happening in China, and really around the globe. So there are other factors that are really kind of causing a potential course
Yep.
alteration here. The question will be, and I'm kind of curious as to whether or not you think this will happen when we see the November FOMC meeting come out. Do you think we'll get any kind of indicator in the facade of Chair Powell that may show us something in terms of a direction?
Oh, for sure. Look, he's put himself in a box,
Mm,
and and we will definitely know whether he's pivoting or not, because he basically said another 75 in November, and now with the emergency quote unquote Fed meeting, there are people doubting that.
right.
And whether he goes through with it or not, he's not going to be able to hide that, right? So in the past, where he wasn't committal as to what level he was going to do, and then the market would say, well, how about 25? Well, how about 50?
Hmm.
Well, how about 75? And like the day or two before, they would leak through other Fed governors talking that, well, maybe we are considering 75, maybe we are considering 50. And so they always kind of gave a little indication. So he'll probably do the same thing in advance of the meeting this time. But here's the real issue: how many rate moves are going to solve the supply chain problems in China? None. You
Sure.
can't
Yeah.
fix that. How many
Yeah.
rate changes are going to fix the price of wheat coming out of Ukraine? Can't fix that. How many interest rate moves are going to change the price of gas coming from Russia, you know, to well, what was coming to Europe? Now they bombed somebody, maybe we bombed the pipeline. Somebody did. So all of that is a moot point as far as I'm concerned. All the Fed funds rate does is liquefy the banks, right? That's what it does. Banks borrow from each other at Fed funds, and then they invest in the treasury market and arb the
Hmm.
spread. That's
Sure.
harder to do today because you got an inverted yield curve, which
Right.
portends recession. So I think they're closing in on that neutral place where then they're going to have to cut. Well, again, what does cutting do? It isn't going to change demand for credit. You and I don't get to borrow at Fed funds. The average person doesn't borrow at Fed funds. I
Hmm.
just saw a stat yesterday. The average car payment is over $700. The average loan is now closing in on 7 years. That's just a rental, right? You don't
Yeah.
own your car. If you have
Yeah.
a 7 year loan, you will be upside down for sure. There will be no equity and you'll pay a lot of interest. And the other thing is, the average interest rate on car loans is double digit. Most people have
Yep.
no idea that's true. They talk about zero rate loans, and that's for the really good credit crew. The average subprime borrower is paying 12, 14, as high as 29%. Paul,
Mm.
imagine paying 29% for a car loan. But there are a lot of people, that's their only choice. They want to get to work. So the big thing for me is earnings. We're in Q4.
Right.
How are Q3 earnings going to be? Everybody promised us that they were going to be awesome. Microsoft said, oh, we're going to be back to double digit growth.
Hmm.
Okay, let's see it.
Yeah.
Zero,
Well,
I
we've already
think
started. Yeah, we've
zero
already
chance.
started.
Zero
Exactly.
chance.
We've already started to see the kind of the third quarter come in a little bit light in a lot of different areas, which I think this is something we've been talking about on the channel for quite some time. Is that Q3, 4 are really going to be the earnings recession, so to speak. Is that we are going to see
Yep.
the impact of what spending has done. In addition to that, if you look at just what the Fed was out in terms of job openings, let me kind of zoom in on that a little bit for you. I mean, the fall off right there in terms of job openings down to where we've seen, have not seen these kinds of lows really since the, right after pandemic period of time in which job openings were pretty much just kneecapped. That's a pretty stark difference just in a very short period of time. My question to you is, do you think this could go further? Because there's some people anticipating this could go back all the way back into 2008 and 2009 numbers with this kind of acceleration and velocity. What are your thoughts?
For sure. Look, I mean, gravity is an interesting thing in that, once you start hurtling towards Earth, the likelihood that you're just going to stop on a dime
Yeah,
is really, really low, right? You look at all of those trends, you don't see any of them go up and then flatline or
yeah,
go
exactly.
down and then
Hmm.
flatline. They go up further than you think, or they go down further than you think, and then they bounce sharply. So, we're in every day you see a headline of some big company making layoffs, right? Every single day. And, I've been impacted in my own extended family. People have been furloughed. So I see it, and I see it everywhere. And this thing about um, jobs and the high level of employment, it's a little bit of fudged numbers. So two things. One, you got the people that every day 10,000 people turn 65 in this
Hmm.
country for the next 17 years. And uh, the problem with that is they take those people out of the workforce. So the workforce participation rate goes down and then the quote unquote employment rate stays high. Well, that's bogus. Have you been in a Walmart lately? There's plenty of people over 65 that are still working. So, second thing is the BLS, maybe take out the L, um, makes this thing called the birth death ratio. So, about
Hmm.
70 odd percent of the jobs that have been created this year aren't real. And what do I mean by that? Well, I mean
Right.
exactly what I just said. They're not real. They say we're this long into a expansion, which by the way, we're not in expansion. We're in a recession. They just haven't called the recession yet.
Hmm.
So they say this long into an expansion, this many companies form and this many companies die, birth, death. So therefore, this many jobs are created. I'm like, well, why don't you actually count the jobs? We have technology now. Like we know exactly how much payroll tax is being paid. We could tell you exactly how many jobs. It's like the farce of the IRS. They know exactly how much each of us owe them, right? Because if we don't pay that, we get fines and penalties. So why don't you just tell me and I'll pay it, instead of having me prepare it or pay someone to prepare it. And then
Go
if
through
I'm
the
wrong, if
rigmarole.
I guess
Yeah.
wrong, you
Yeah.
fine me.
Yeah.
That's a farce. That's a full employment act. So
Yeah.
same thing is true here. And the idea that people hang on these jobs numbers. And then the last point I'll make is, if you overlaid housing prices on that jobs opening,
Look the same.
where the head goes, the body follows.
Yeah.
Housing prices are collapsing. Used car prices are collapsing. Those are both indicators of a crunch on household income. And when those go down.
Yeah, I was just saying, when you look at those two, how do you compare the next shoe to drop? One I've talked about a lot, and that is the credit side of things, where we've seen savings start to deplete. Obviously, the jobs are disappearing. We know the market pressures are there, which is going to really reduce supply side or demand side.
It's all
in terms
credit cards, credit card debt.
So now,
credit card debt is skyrocketing.
How does that sustain out into what could be a pivot, and possibly how long would that take us to kind of recover from this? Because this is all going to continue its snowballing effect downhill for some time. Where do you see the real light at the tunnel? There are going to be some early movement opportunities here, especially with the pivot. People who are watching our show, these are the kind of investors that really understand this, buying right there off that scoop. Sure, there may be a little bit push further down, but most likely you're close to the bottom. Do you think this is still a year out before we see the markets actually respond in terms of an upside movement, to where most people are saying, okay, markets are back, housing is back, jobs are starting to recover? What are your thoughts?
Yeah, look, I think it all comes down to the tug of war between reality and expectations, Fed expectations. The reality is GDP globally is falling.
Yeah.
Okay. That's a reality. That's truth. Earnings are going to disappoint pretty dramatically. But see, here's the game we play. So a year ago, a company tells me they're going to make $1. 6 months ago, they tell me they're going to make 50 cents. Last week, they tell me they're going to make 10 cents. And then they report 11 cents and call it a beat.
Yeah.
Like, how is that a beat? You underperformed by 90%, but because you lowered the estimate right before the announcement, everyone calls it a beat. That's not a beat. Yeah. So that gamesmanship will happen. And then here's the thing. We've become addicted to free money from the Fed.
Sure.
As a culture, as a society, like, California is sending out checks. Think of the illogic of this. They're sending out money to people to combat inflation, which was caused by sending too much money right after the lockdown.
To the people. Yeah.
We printed too much money. It caused the inflation. It caused oil prices and used car prices to rise. And now we're sending people more money, trying to combat inflation. You're creating inflation, trying to combat inflation. It doesn't make any sense. So
I think the bigger question here, though, Mark, is, with this scenario playing in, at some point, if most likely we're going to see that pivot occur. Yes, the Fed has made an absolute big error here. How does this get fixed to sustain the U.S. economy over the next 5-10 years, which are typically the cycles that we have seen in the past? 7 to 10 years, you get those cycles in. This past one a little different. Obviously, with the pandemic and scenarios playing into this. How does this get fixed and adjusted?
Important distinction. I'm talking markets, not economy. The economy is going to be just fine, right? The economy is incredibly resilient. We have tons of innovation. Recessions are amazing times for new company formation. People get laid off. They don't have a choice. They have to get entrepreneurial. Some of the best companies, JetBlue Airlines was created in 2001 at the trough of the recession. Splunk was created at the trough of, I think, 2008, 2009. So great companies get created at, times when everything's stressed, and that's totally natural. And then the economy recovers The problem we had starting in 2009 with QE is we disrupted the normal cycle, right? The reason crypto winter, crypto spring, crypto summer, crypto fall, every 4 years we have that natural cycle and we get bull markets and bear markets. But every period, the low is higher, right? The total market cap of crypto just keeps growing. Why? Well, because there's no one messing with the cycle. We don't have a bunch of old, pale, stale, male white guys sitting in a room dictating rates in crypto. It's driven by markets. And so the economy will recover. The cure for, overly ebullient economies is a recession. The cure for a recession is a recovery. So that's exactly, I'm not worried about that at all. I am still a little worried about zero COVID, right? Zero COVID in China, it's dumb. It's like super dumb. And it's probably even a little bit sinister. There's probably a reason behind it. But there was one good thing the other day. They had a national holiday and no one had a mask on. So that's actually, and maybe it was just a photo op and maybe they're still, putting people in the camps. But I think they're moving away from zero COVID, because until zero COVID ends and we get the supply chain fixed. I mean, I'll give you just a simple example. So I have a 5-year-old Kia Niro, which I love. I love my Kia. It's a hybrid. I love it. And I want another one. So I go to the dealer, doesn't have any. When are you going to get one? Don't know. Why not? Because, components are made in China, assembled in Korea. Don't know when we're going to get a new one. Okay, that's interesting. So until that gets fixed, I'm going to drive my 5-year-old car, which is not the end of the world. It works just fine. I did get backed into by a poor young kid learning to drive at the mall, and I didn't have the heart to charge his insurance company, so I just left it. But so it doesn't look really good. But I look at where we are. Economy will be fine eventually. The problem is the markets. The markets are still way too levered, equity markets. They are still way too ebullient. We're still paying too much as a percentage of sales. The price to sales ratio for tech is still too high. And even though some of these companies are down 90%, they could fall another 90% just to get to fair value, things like Shopify and others. Not that they're not good companies. They just got to such egregious valuations. That doesn't mean there aren't values in the stock market. There are, right? I think some of the energy stocks continue to be great value because oil prices are probably not going to zero like everybody thought they were. Fossil fuels are not going away anytime soon. There's still some value in some of the fintech and the true innovators. But generally speaking, I'm worried about equity markets. I'm not worried about crypto at all. Why? Well, because the innovation in crypto is extraordinary. The valuations in crypto are super cheap, right? We're at the tail end of the bear market, not the beginning. And maybe we're halfway through the bear market in equities. Maybe we're 80%. Maybe the Fed will pivot and we'll get that face melter. And, I'll look silly for being cautious. But short of the Fed actually cutting rates, the economy is going to be unstable and earnings are going to stink.
Yeah, there was a post here by Macro Alf. We've had Alfonso on the show before. He talks about, investors paying a heavy price here, mistakenly calling the Fed pivot multiple times this year. This has been talked about before. Next expensive mistake goes toward the weakness in the labor market, which we showed earlier. Again, not bullish for stocks. His thinking is
Al. No.
Yes.
It's not. It should be no exclamation point. It's not, exclamation point, not exclamation point. Or just period. But no, I love him. And it's
why do you think I want to jump to this real quick. Why do you think we're not seeing mass exodus out of securities and possibly moving into Bitcoin or Ethereum or other assets within the crypto space?
Great question. And questions always beat answers. Answers are easy. Questions are hard. That is a great question. If this is so great, why isn't everybody doing it? Well,
Yeah.
First thing, people are, right? We have hundreds of millions, plural, people now that own digital assets. I think over half of the people in the US have in some way dabbled in digital assets. So that's pretty amazing. From 14
Hmm.
years ago, zero,
It
didn't even
is.
exist. So it's pretty quick. And you think about an S curve, right? Get the first 10% in the first 10 years, the next 80% in the next 10 years, and the final 10% in the next 10 years. So a 30-year
Right.
cycle. So 14 years in, we're right at we should 50%, which is pretty amazing. And so I think the real reason that we're not seeing more is the regulators, right? We have entered the then they fight you stage. There's the famous quote that, I guess Gandhi didn't say. I wish I remember who the guy was who said it, but first then they laugh at you, then they fight you, then you win. From 2009 to 15, first they ignore you. Bunch of nerds and geeks playing with your magic internet money. Stupid. Okay. Then they laugh at you. 2016 to 21, those nerds and geeks playing with their magic internet money. How foolish. So 2022, probably to 2027, they're going to fight, and they're going to do it through regular. They're talking about stable coins. They're talking about lenders. I mean, so here's the thing. If I put my money in a bank, I get paid 1%, 1.5% interest. If I take that fiat, convert it to a stable coin, deposit it at BlockFi, I make 6%. 6 is better than 1.5 or 2. But why don't more people do that? Well,
Right.
because the regulators are trying to say that it's legal. That's a security. Like, the bank deposit is security on no planet. So it's an interesting dilemma that innovators don't care incumbents, right?
Yeah,
They
I
don't
think
think
we've
about the
seen.
incumbents.
Yeah, we've seen, obviously those kind of scenarios play out within the stablecoin market where you see some of these. Gemini just dropped their stablecoin rates though from what was around 7% down to around 5% for GUSD today. So there are some pressures coming in from that. Then you've got Robinhood who's taking fiat in, and I think with their gold membership still paying 3%. So there are some sorts of havens out there. Again, I look
Yep.
at this transition that we're seeing, kind of moving to this next level, very interesting, because whether or not we see this $20,000 base as kind of the new floor of where Bitcoin is, because you think about that, down to 17K at its very lowest in this run. 20K has been kind of that range section that we just don't seem to move out of. And when you look at just the chart here, I want to kind of go in here. One thing that we had been tracking was this wedge pattern that it busted out of, and it's staying in this zone, which again was overperforming even sentiment that had been somewhat sideways here just in the
Yep.
last month or so. So it's definitely in an area right now that is a bit peculiar, that we have not tracked this way over almost the last year. So there is something
Yep.
happening right now with Bitcoin, hovering around the 20,000 mark, but definitely outside of what it has been holding. And if you look at the sentiment here, again, sentiment, we saw this nice little raise right here, which was that move upward, and then a little bit of flat line right here. These are the two sentiment lines that
Yep.
we track, top line sentiment and what we call amplification sentiment. So again, it gets back to that scenario where, is this the bottom? And I think that is what everybody's asking. Let me kind of add to that conversation a minute here, based on what's happening from the institutional players. So you've got Schwab,
Mhm.
Citadel Securities, Fidelity, all timing wise, very interesting timing. EDX Markets is going soft launch, I think this month, and then they're getting ready to roll this out early next year. And one of the things that Jamil said in his recent conversation with CoinDesk, massive amounts of money sitting on the sidelines right now. Timing
Mhm.
wise, coincidence? What are your thoughts here?
Not coincidence at
Major.
all.
Yeah.
So look, the inevitability of the technology has been the same really since its inception. And it's a natural evolution of computing power. We've talked about this on the show
Right.
before, right? 1954 was the mainframe, 68 was the microchip,
Oh, yeah.
82 was a personal computer, 96 was the internet, 2010 was the mobile net, and 2024 is the truth net. And blockchain is simply going to replace trust with truth and will disrupt all of financial services. So it's definitely going to happen. And all of these financial services companies are waking up to that reality
Yeah.
and they're embracing it. So that's not surprising at all. The question of whether we're at the bottom or not comes down, I think, to this. If you look at the last cycle, we had the big drop from 20K down to 6K from December of 17 to
Yep.
November of 18. And then we had one final cathartic, again, face melter the wrong way, down to 3,200. And about 3 months ago, I tweeted out, we were stuck in this descending triangle pattern at 30,000. And I said, the longer we stay in this pattern, we were making lower highs, bouncing off 30, just like we did in 2018. We were making lower highs, bouncing off 6. And then on November, I think it was 7th or something like that, we bam, fell to 3,200. And I said, look, the longer we stay at 30, the more chance we're going to 15. 4 days later, we hit 17.5. And is that 15? I think it probably is. Now, from November of 18 to kind of April of 19, we kind of bounced around 3,200 to 4,200. And it took a while to then start, crypto summer. And I think the same thing's going to happen here. Crypto spring will last probably from now through middle of Q1 next year. Then we get the 9-month anticipation of the halving in kind of January 2024, and we're off to the races again. So now that doesn't preclude there is an ugliness to that pattern you showed, that every time we hit 24 since June, there was massive selling. I mean, massive selling. I'm like, who the heck is that? I thought all the leverage was done. So that was a little disconcerting. And now we're making this bounce along 19 to 20. And I love your chart where it shows we broke out of that channel. That's good. But the longer we stay around 20, there is an increasing risk of one last cathartic puke that would take it all the way down to the 10 to 12 range. I don't think that's going to happen, but it's a non-zero probability. And so I wouldn't put all my capital in today. I just wouldn't. In fact, I say that all the time. You should never do that. You should. I was on network TV 3 years ago. And while I was on TV, I mean, you're only on 6 minutes, right? In the 6 minutes I was on air, Bitcoin went from 10,000 to 8,000 in 6 minutes. And Melissa Lee says, what should we do? I'm like, buy it. And just this look of incredulity. And so what do you mean? Well, you'd always say that. I'm like, no. Yes, I would. Buy it today, buy it tomorrow, buy it next week, buy it next month. Don't buy it all at once. But every week or every month or every two, I don't care what the periodicity is, but take whatever percentage you're going to allocate. If you're older like me, right? 3, 4, 5%. If you're young, I don't know, 5, 8, 10, 15%, maybe more. Figure out what that is, your net worth. And if you're young, you got to do the calculus of saying, well, my net worth's going to grow because I got income and future and I got appreciating assets. So that's got to be a bigger number. So, but don't do it all at once.
Yeah, sure.
Buy it
it's
over
just
time,
feathering it in for sure.
Dollar cost average in.
I want to get into a couple of topics here that kind of, I think, also showcase the global macro impressions that we're seeing on the economy. One is the EU now banning crypto payments from Russia in these new sanction packages. Again, this is a scenario that we're going to start seeing crypto being weaponized to a certain extent around the globe. I mean, in my opinion, I feel like this is a really bad, even though I don't necessarily agree with what's happening with Russia, but in the essence of really kind of a decentralized ecosystem such as Bitcoin, it's just interesting to me that the EU is even successful in being able to pull this off in a way
Oh, but
that's
they
going to
can't.
matter.
They can
Exactly.
they can print the headline. You can
Yeah.
print the headline, but you can't stop it. It's
Yeah.
like you can't ban a decentralized asset. You can't stop a decentralized network. And so, look, China banned Bitcoin. And I think China still is 20+% of daily transactions or something
Large
like
and
that.
still a hash rate too. Yeah.
Yeah. And so but they banned it. Well, no, they didn't ban it. It's like when they made gold illegal in 1933. Did people stop owning gold? No. Did everybody turn it into the government? No. They kept it. So the idea of crypto is anathema to the United States because the United States, as the world reserve currency, can weaponize the dollar.
Yeah. Yeah.
If we called sanctions what they are, Paul,
Oh yeah.
starving women and children, if we actually called it that, right? If we said we're going to starve the women and children of Iran or the women and children of Russia, if we called it that, I bet there would be less people in favor of it.
Not as many for sure. All right.
Yeah. And
So
there should be
global.
some. There would still be some.
Sure. Oh
The
yeah, for
neocons
sure.
still want it. But
Yeah.
but the reality is Bitcoin and other assets allow people to opt out of the fiat fiasco. What's the fiat fiasco? Every single day, everywhere in the world, central bankers steal our wealth through this thing called inflation.
Yep.
Under the guise of it being good for us, right? The 2% inflation is good for you. On what planet is taking half of my purchasing power over 30 years good for me? On no planet is that good. So it's a farce perpetuated starting in 1607 by the Rothschilds and the Bank of the Netherlands, and then the Bank of England in the 1700s, and then the Fed in 1913, and all the other central banks around the world. And it channels the wealth up to the elite. Okay. But if you're down here in the middle of the pyramid, you can actually say, you know what? I opt out. So take Venezuela. Maduro and his cronies have destroyed the bolivar, down 99.999%. They got really rich because they owned the assets that were denominated in other currencies, and they got super, super rich. They're denominated in bolivars, and then they could sell them in other assets, and they got super rich. And the average person got wiped out unless they took those bolivars and put them into a digital asset. Here's the funny thing. In Venezuela, there's never been a bear market in Bitcoin. The price of Bitcoin in bolivars has never gone down. It only goes up. Same thing in Turkish lira, Argentinian pesos. The problem is we, Americans, only look at Bitcoin in dollars.
Compared to the dollars.
And there is fluctuation in price because the dollar can be manipulated and because markets, traders, speculators, gamblers were allowed to borrow and buy the asset. That caused speculation in the price. And then we have futures markets, and the futures market allow prices to be manipulated. That's why gold has been so troubling over the last 10 years. It should be much higher. Gold should be much higher. But JP Morgan and all the big banks can sell futures, right, out of thin air. They can create a bar of gold out of thin air in the futures market and sell it. And it's not a coincidence, Paul, that the bear market in Bitcoin started in November when they approved the Bitcoin futures ETF.
Yeah.
Had they approved a Bitcoin ETF, a spot ETF, we would have had a
would
bull
have never
market.
started. Yeah, would have never started for sure.
But the fact that you can short the future with nothing against it, you can be naked short, it allows for spoofing of the price.
Yeah, for sure. All right, so rounding this out, kind of bringing it back into whether or not the Fed will pivot. You got Sam Bankman saying, hey, maybe we are at the bottom here. There's a good possibility. Obviously, FTX is making some very serious moves towards Celsius, obviously with Voyager, along with what's happening with the SEC, because you got Gensler over there doing the Kim Kardashian thing. You've got him trying to raise some awareness over there on that side, which is going after one of the most popular pop stars out there. in essence, on the other side, really struggling overall in the XRP case. So could be kind of a nothing to see here type thing where the SEC could be getting ready to take a black eye. All these kind of things that they're playing in the market space right now. FTX's moves, obviously what we're seeing both on a political and geopolitical macro landscape. If you look at that Q4 and say, all right, this is the potential. Q4 is our potential of a true bottom and a Fed pivot, potentially in the essence of getting some sort of indicator. Do you think there's any possibility of getting a double bottom, meaning that the Fed says they're kind of going this direction and everybody jumps in, and then boom, we get a slap, and the Fed kind of does a retracement a little bit? Are we in any kind of concern around that?
100%. I mean, look, Sam is doing what good value investors do. He's buying what went on sale.
Yeah.
Right? Investing, Paul's the only business where when things go on sale, people run out of the store. In every other business, you put stuff on sale, people run into the store, right? They'll run over each other to get into Black Friday sales or wedding dress sales at Filene's basement. I mean, they'll bludgeon each other. But you put stocks or crypto on sale and people run out of the store. So Sam is doing what you should do, right? Stay in the store and buy the cheap stuff. So, but the thing about it is you need three things to be a great investor. You need conviction, courage, and cash. You get conviction from doing the work. You get courage from just, mental toughness. But cash, you got to have it. So if you don't have the cash to buy the cheap stuff, it's harder. So, he had all three. He had conviction from being around. He has the courage, to have, and he's got a war chest. So I think the same thing is true here. Investors should be looking at the range of outcomes, and it is a range, right? We don't know any one thing is going to happen. Is it possible the Fed did their pivot on Sunday evening and they're not going to raise rates anymore? It's possible. For sure.
Well, so we may be looking at that. Yeah, for sure.
That is one potential outcome. Okay. Then there's the outcome where they wanted us to believe they're going to pivot, but they're still going to go through with it. Then there's the really, bad thing where the sinister stuff where they actually go worse, right? They surprise to the upside and do 100 basis points or more. So I think that is a low probability scenario. Okay. I think the middle scenario, you could break it into two. They do the 75 basis points. I think that's low too. They do less, 50 or 25. I think that's a really high probability. They do none, pretty low probability. They reverse and cut, super low probability. But the way Soros says, investing as if you know the future doesn't make any sense at all. You have to use scenarios. So if we look at those 5 scenarios, okay, they surprise to the upside more than 75 basis points. Pretty low probability, okay? They do 75, still probably pretty low. They do 50 or 25, probably pretty high probability. They don't do anything. Probably high, but lower. They cut, pretty low probability. So you have a bell curve of outcomes. Make your bets accordingly.
Play the middle. Mark, it's always fun talking to you and diving into it. I think this is going to be the next, really the next 6 months. We've talked about Q4 being a big window here to watch closely. November's FOMC will be one that I think is going to be very interesting. Even though I think the previous FOMC meeting was one that gave us a bit of a guideline because it did kind of set the stage for what is setting up right now, which is that element of a potential pivot. Whether this rolls into into Q4 or into Q1 will still be out in play. But I do like the fact that you are still strong on where the digital asset space is and where we could still see the securities market. So you still believe that there is a detachment in essence from securities and what's happening in crypto, even though they have similarities and there's some things in which they kind of run together. But overall, you feel like this is actually detached.
During liquidations, March 2020,
Yeah.
November to June of 2022, 2018, when he first talked about raising interest rates, they get more correlated because in a liquidation, when people get margin calls, they have to sell what they can sell. And Bitcoin, gold, and part of it too is most people are late to the party, right? The big hedge funds, the big investment banks. And so when they look at the three things they can sell, bonds, gold, and Bitcoin, I'm like, yeah, get that Bitcoin stuff out of here. I don't even know what it is. I don't have the conviction because I didn't do the work. I bought it because everyone else was doing it. And so that's not surprising that that gets sold first. And so as more people gain conviction, like you said, like I was skeptical. 2013, I'd be a lot wealthier, Paul, if I wasn't so damn skeptical in 2013.
Yeah,
right?
well,
I was not running drugs on Silk Road.
Yeah.
I was not a cryptography student. And the Winklevoss twins and I were introduced to Bitcoin the same month in 2013.
Okay. Wow.
They're multi-billionaires and I'm not. Why? Because they were with Charlie Shrem and Ibiza and they got it.
And they had cash and conviction.
Well, they had cash too. So they had everything, right? They got conviction, they had courage. And back then it was really big courage. And then they had cash. They had $500 million from the Facebook thing. But for me, I had cash. I actually had courage. I just didn't have the conviction because I hadn't done the work.
Yeah.
And I wasn't with the right group of people. That doesn't mean the people I was with were wrong. It just means I wasn't with the right group of people to help educate me fast enough. Now I did get conviction, and no one's crying for me. I'm doing okay. So, but I was skeptical until I did the work, and that's what I ask everyone to do. Do the work.
It is.
Watch your show, dive into the asset, and once you see it, once the crypto light goes off, you can't unsee it.
It's definitely a revelation once that you are in that. And I get a chance to see this. I've been doing these small conferences with group high net worth individuals, and in many cases they've never experienced anything around crypto, and it really is a light bulb moment that you get a chance to see. Unfortunately, here on the show we don't get a chance to see you guys out there, so we're only kind of broadcasting to you, but we feel it in the comments. So keep those coming in, and of course smash the like button, because that gives us kind of an insight as to whether or not you're really starting to understand really what's in front of us in terms of an opportunity. Mark, we've got a poll here, I think one coming in, and then I'll take a couple of questions. All right, so are you anticipating a face melter rally in the next several months? People are still a little bit hesitant here on this one at 52%, 48%. So I think there's some caution.
No, but that's perfect.
Right now.
That's where they should be, right? That's where they should be. Because what I said was the probability of a cut, was about equal to the probability of a negative surprise, very low.
Right. Yeah.
The likelihood of some deviation from what they said is pretty high. So it is about a toss-up at this point.
A couple of questions coming in from the audience. I want to focus on one here from Eric. It says they can stop all exchanges and on and off ramp. Do you think there's any risk whatsoever where we get a regulatory environment that comes in and pretty much isolates the on and off ramps, such as exchanges, DEXs, etc.?
No.
Or do you feel like that's just not even an issue?
They can in the physical geographic world where we're all tethered.
Yeah.
Right. That's not the metaverse, right? The metaverse has no boundaries, right? It has no borders. If they ban the on ramps and off ramps in the United States, I can go to Russia, I can go to Canada, I can go to Australia, I can go to China, I can VPN somewhere. So is it possible that every government in the world, all 212 of them, collude? Nope. Not possible.
Yeah.
Think about that. Not possible. Because when China banned it, what happened? Japan and Korea said, bring it. We'll take all the miners, we'll take all the exchanges, and we'll tax it, and we'll inculcate it into our culture and we'll benefit from it.
And
So
you've got the people that want to make it. They want to change their whole destiny of their countries. So they're definitely
the
taking those
telephone
changes.
companies tried to ban the internet because they did not like that voice over IP was going to destroy their business. And they tried to use regulation to make it illegal to use the internet. And that didn't work, thanks to Al Gore. So Al Gore does get a little credit.
Yeah. A couple of questions here on the finance side of things. Your thoughts on bonds right now? Where are you falling within bonds? Are you a little bit skittish on bonds?
Bonds are interesting. Bonds are super cheap in the sense of particularly long bonds. So as a deflation hedge, I kind of lean that way. Mm-hmm. I think the likelihood that there's going to be material increases in rates from here is pretty low. I wouldn't make a levered bet on that in the short run because Powell has surprised me in his willingness to inflict harm this year. So I probably wouldn't try to, out or to be too smart by half. So I'd probably wait to see what November says, and then I'd accumulate, owning a little bit of long duration treasuries as a hedge against deflation. And deflation is driven by demographics. Yeah. And we know a couple things. We know that the working age population growth is going to fall over the next 10 years. We know that means long-term interest rates will fall and inflation will fall. So this inflation that we have isn't really inflation. It's just oil prices and used car prices, and those are going away. Those will be gone by the end of this year. And we'll be back to probably 3%-ish type numbers. And then from there, I think we could be back to a zero inflation world, just like Japan is. Now, Japan's been trying to get inflation for 2 decades, and they failed.
Yeah.
So
I don't know. I'm on the camp that inflation is probably going to stick around. I feel this in the sense.
Next time we'll talk about that.
Yeah, we got to dive in deep on that. I think this whole aspect of getting back to 2% may be just a pipe dream for where this may go. But I'd love to hear your opinion on how that might occur, because there's a lot of obvious pressures that we're going to continue to see, from a global aspect of things. And I think this.
And let me leave you with one thought, because I do have to run. I have to run to a 2:00 show.
Yep.
Doing back-to-back today. Here's the thing. Demographics is destiny. Deflation is caused by the killer Ds. Okay? Demographics, bad demographics, too many old people, too much debt. Debt is deflationary, not inflationary. And we have massive debt everywhere in the world.
And then Democrats.
And that leads to deflation. So the killer Ds are demographics, debt, and deflation.
Yeah.
And I think that's where we're headed. So this short-term blip in CPI, because we measure funny, oil prices, used car prices, and the irrational response of governments around the world to lock people in their apartments. Okay, that I don't think is coming back.
Yeah.
I hope. I really don't think it's coming back.
Let's hope not.
No. Again, I'll leave you with a positive. So a year ago, I'd walk down the hill, to Starbucks to get my lunch, and people would walk to the other side of the street if I was coming at them, right? Craziness, right? We're outside, zero chance of getting COVID, 0.000 chance. But they would walk to the other side. Today, I'm walking up the hill, one walks in, she made eye contact, she smiled, she said, "How you doing?"
Yep.
Awesome.
Hopefully.
That's the way the world should be.
It should be.
Smile at someone today, say hello. Paul, thanks for having me.
And, man, it's been great having you. Thanks. I appreciate it. All right, you guys are tuned in, maybe over on the podcast side of things. Jump over to the YouTube channel and like a few videos, subscribe. It does help us, and I think it will help you guys too, because what it does is it helps spread the word. It helps really kind of create that discovery mechanism within YouTube that I think is one of the most powerful educational tools out there today. And the way it happens is through an algorithm that is based off of subscriptions and likes. That's why all the YouTubers and really any media company is asking for these, because it does really kind of amplify the algorithm overall. So make sure and do that. If you guys want to jump into the Diamond Circle, do that. It's absolutely free. If you want to reach me, it is out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.